Testing. Welcome to the live stream. It's been a minute, right? Lot going on. Stock market actually confounds investors today. And just when you think things couldn't get any worse, and we all followed the news over the weekend, devastation in the Middle East, a war, warnings from Iran, Russia chiming in. I mean, the hypocrisy of Russia to actually chime in into this battle is beyond belief. But however, with everything going on, oil expected to surge, possible spreading of the war in the Middle East, Ukraine not quite making progress like it was, and we're worried about supplying them. Economy could take a hit, worry after worry, and a crescendo. And what happens? The stock market goes up last week, and we have today the best day that we've seen in over a month. Stocks are looking good. Major averages go up. So just when you think things can't get worse, things do the opposite. And isn't that the story of the stock market over the short term? It's as if it's designed to throw you off your game. Now, this isn't a worry for you if you're a long-term investor, you're practicing smart personal finance, spending less than you make, saving more than you spend, investing regularly. These are the things that we counsel here in the show. Be the boss of your money. And in our firm, Client First Strategy, all the time. You're not under some pressure to make a trade, to have to do something. But when fear hits, it's the fight or flight instinct that takes over. And for investors, that often means selling everything when things are down, when things look scary, and then saying, I'll buy everything back when the dark clouds dissipate. I'll get back in, and the investments you sold are much higher, but you just feel better about them. But they're the same investments. So why feel better or worse about your investments based on short-term swings? You know you're making a mistake. Intellectually, you know that. But emotionally, we are human. And that fight-to-flight instinct is really what we have to fight against. That's why I always say, as a financial advisor, in the beginning of a relationship, I tell my new clients a lot about what to do. But once we get everything in order, most of what I tell them afterward is what not to do to improve returns, not because we're going to magically pick better investments. We think we'll pick well. We do our best. But that's all we could do, right? But what we do is we help mitigate mistakes. We help you practice personal finance. We help you become more tax efficient with your buys and sells of your investments, with using tax-deferred or tax-sheltered accounts. We place certain investments in certain kinds of accounts to more or less maximize what your potential returns could be based on your personal finance, not based on us trying to outsmart the fox of a stock market, right? Having said that, let's get into the intro. You can't invest directly into an index, but you can invest into a security that tracks or mimics an index. And diversification, which is a huge deal to us at Client First Strategy, it doesn't it helps mitigate risk. It helps avoid that put all your eggs into one basket, but it doesn't necessarily protect your portfolio from going down in a generally down market. Let's roll the intro. We got a couple of things to talk about. How this market surprised everybody by going up today when everybody probably expected it to be down. Here we go. And we're back. Thank you for joining us. We're just getting started. While you're watching, if you have any questions about the content that we're talking about today, ask away in the comments. I love hearing from you. When you ask your questions, it's just a happy thing. And if you have a question, others could have it too. And I'm just so happy to give you the answer. And you're also helping me out because it makes me think a little bit more deeply about what this means to you. And isn't that what this show is all about? It's about you, the audience, right? My viewer, my friends. Thank you very much. I love the live streaming because I feel like, we're just a bunch of friends hanging out. And if you'd like to join me in a live stream episode sometime, let me know. That's very easy to set up. It's very similar to like a Zoom call. If you don't mind, leave us a thumbs up or give me a heart or an applause, depending on which social media platform you're watching it. I see that. It's very encouraging. Words of wisdom, words of encouragement are always appreciated. And when you do that, it also helps the algorithm spread the good word of the show that we're doing here. It's all educational. And, I'm a financial advisor with over 30 years of experience. I've got a lot to teach, a lot of mistakes that I've learned from, a lot of successes that I've learned from, and I've seen an awful lot of very successful people do a lot of very successful things. I've seen a lot of successful people learn lessons from their own experience. I share all of that right here in the show to make you the boss of your money. We don't think of ourselves as the boss, but when it comes to you and your money, you actually are the boss. You are in charge. You are in control. You don't have to be nice about it. You just have to be in control. Okay? You want your money to work hard for you, just like you work hard for your money. But at some point, money could take over. It could take over our lives. We could become obsessive and possessive with money. We want to shake that. We want to outrun that with good personal finance. I know it sounds hard, but you can do it. That's what we'll talk about. Social Security cost of living adjustment for this year will be up 3.2%. Not a huge amount, but inflation is measured on the third quarter of every year. That's what the Social Security Administration goes by. The inflation rate for the third quarter came out to 3.2%. Couple of years, 2 years, in the last prior 2 years, we've had an 8% plus and 5% plus rise in the COLA, cost of living adjustment for Social Security. And the cost of living adjustment is not meant to get you ahead. It's not supposed to beat inflation or outpace inflation. That's what investments are supposed to do for you over time. Certain kinds of investments like stocks and real estate, not necessarily fixed income. But the COLAs they're supposed to help maintain the value of the benefit that you get from Social Security. And that's all they're supposed to do. Now we know inflation really depends on the life cycle you're in terms of what you're spending money on. College, healthcare expenses, different stages of life bring in different expenses. And we also know that this is very subject to where in the country that you live, because some parts of the country are cheaper to live in than others. But that doesn't mean everything you buy is cheaper where you live, and it doesn't mean everything is more expensive where you live. Try buying homeowners insurance and automobile insurance in the state of Florida, for example. But then try paying your real estate taxes in the state of New Jersey and New York. You see what I mean? It's really like they say real estate is local. Inflation is pretty local also. Having said that, Social Security rise is 3.2% for this year, which Social Security beneficiary recipients will start seeing in 2024. On average, Social Security beneficiaries will see an increase on average of $59 per month. Okay, enough about that. Today was a crazy day in the stock market. Not so much that it was a good day, the market was up, if you haven't heard. But with all the news, and if you're like me, I follow the news constantly all weekend. I don't just like to watch news. I follow Peter Zion. I follow Ian Bremer. I follow a few other people because I'm not just looking for the news. How many people killed, the sad statistics? How many troops has Israel committed to fighting in the Gaza Strip? Where are people getting out? Are people able to get through the Rafah crossing into Egypt, out of Gaza? I'm following all of the news, but I also like to follow for perspective. The only way, the only way out of any problem is to have perspective. If you don't have perspective of the past, how something started, and if you can't look at other people's perspectives, you can't solve a problem. So I really want to understand perspective. But as far as investing goes in personal finance, I've said it before, I'll say it again. The news, as far as personal finance goes, it's supposed to throw you off your game. Only only a few of us aren't thrown off our game. And those few of us are the ones who are successful, who become successful retirees, because we didn't miss out on years of investing, of dollar cost averaging, of compounding our investments. We didn't bail out every time the market went down. We didn't try to think, well, I'll get out when the market is better, I'll get back in. Well, if the market's going down, I'll get out now and I'll get back in when the market's lower. You know darn well that that doesn't happen. Not to you anyway, but it's not going to stop you from trying. That's my job. So if I give you perspective and I can tie it into the market and personal finance, you're more likely to stick with your investments. So we do have to look at the stats, how things did today. What was so surprising today? Oil went down. Cooler heads, as far as investors go, decided, you know what? We don't think the war spills over. The analysts, investors have looked at other Middle Eastern players, the big ones, Iran and Saudi Arabia. They're really not doing a whole hell of a lot. They're not taking in Palestinians. They don't want to. They could have always said, hey, we'll carve out a nice piece of land for you. When the Palestinians came to Lebanon, they got into the government and it became a problem. When they went into Jordan actually had to kick them out. The fact is, and Egypt doesn't want them either. And that's the issue. Nobody wants the refugee problem today. Isn't that the case for all over the world? So therefore, they are more or less stuck, and more pragmatic players in this generation of Middle Eastern leaders, except for Iran, are more interested in economics and their own social stability within their own borders. Having said that, oil did not spike. Okay, oil did not spike, and we did not see a contagion of the Israeli-Hamas war spill over into the rest of the Middle East. Not saying it can't happen. We'll see. There are anarchists out there that would love to turn one enemy against another because it could suit the anarchists' goals and objectives. Having said all that, oil actually went down today. Earnings have come out pretty darn good for the third quarter. Of course, that doesn't include the fourth quarter because we're in the fourth quarter now. But companies are not saying things are terrible. They did not say they see a much worse situation for their businesses going forward. Some analysts believe, and some corporations are saying, we think earnings have bottomed, that we've got better earnings coming out. It's really hard to argue that we're going into a hard landing when the economy is not showing a hard landing. Employment is still pretty good. Why do people feel miserable and say the economy stinks if employment is at a 50-year high, unemployment at a 50-year low? I'm talking employment rates. Inflation. So even if you're getting more money and you have a job, you're getting a raise, you're still hurt by inflation. So it's just not as fun. As inflation moderates, which that's an expectation, as the last year and a half of interest rate hikes start to kick in, we do expect inflation to moderate. We do expect the economy to slow down. And it's really tough to say. Do we have a gradual slowdown that gives the Federal Reserve time to adjust and cut rates? Or do we have a sudden slowdown and now everybody's scrambling to arrest a down market and negative psychology? That's what's so tough. And if you're waiting for the Federal Reserve to figure this out, if you're waiting for you to figure this out and for me to figure it out, you're going to be waiting a long time. You'll probably miss a lot of upside. You could go years without being invested, and that's what really could hurt your long-term upside potential in meeting your financial objectives when you retire and you convert your money back into time, right? Because when you work, you're converting your time into money. And then when you retire, you're converting the money back into time. But the idea with investments is it helps grow your money over time above and beyond that of the inflation rate. That's what we're looking to do with the stock market. That is the ultimate goal from a mathematical perspective. All right, let's take a look how things did in the world. Pop myself up here. And okay, so let's first take a look at the military contractors. These are the companies that make drones and missiles and submarines and fighter jets. That's a major drone manufacturer. AeroVironment, that continues to move higher after the last quarterly expectations. Stock still has a little bit of a ways to go to its high, but up today, that continues to do well. And then we want to take a look. I'm just going to skip right down to Raytheon RTX. RTX used to be called Raytheon radar company. They make radar installations, things like that. Their products go into military aircraft, for example, up 73 cents. Lockheed Martin was off 65 cents. No great shakes. That stock had a pretty big pop in the last 2 weeks or so. Northrop Grumman off $1 again. That had a pretty big pop the last week or so. So a bit of a mixed bag for defense contractors. The Dow was up 314 points. NASDAQ up 160. S&P up 45. So the major averages were up anywhere from 90 basis points to 1.2%. Pretty good day overall. I always tell you 1% moves up or down are really what gets my attention. So the major averages definitely got my attention. Oil down 64 cents. Just when you think oil would do nothing but go up, and now you're hearing $150 a barrel and $200 a barrel. I don't know. That sounds a little hyperbolic for a prediction to me. Nobody noticed, but the U.S. drilled about, we extracted about, 13 million barrels per day in the last month, and we are now hitting record production in the United States. And for those that say, then why is oil so high? Because it's priced on a global market. The other thing is oil producers in the United States, they're not for profits. They're looking to sell their oil for as much as possible, for as big of a profit as possible. So unless you think Chevron or ExxonMobil decided to become not-for-profit companies, they're not going to just discount the oil to their cost. They have to make money because they need money to reinvest, to keep drilling. The oil industry is an incredibly capital-intensive business, and it never stops. It's never like you invest in an oil well and you walk away and you're done. That's how alternative energy works. You invest in solar panels, and then you walk away and you just collect the benefit. Oil, on the other hand, doesn't have quite as big of an initial outlay, but the outlay never goes away. The VIX down 2 points. That's a pretty good amount, down to 17. We'll see, but it doesn't seem like investors are really hitting a panic button right now, and it just seems to me, investors are pretty darn calm about everything taking place in the Middle East. And then we take a look at the bond market. This is another reason why the stock market surprised people. Interest rates were up almost across the board. You see all that green on the screen. Usually when that happens, stocks go down. So with all the worry, stocks apparently were oversold, and they've been bouncing up starting last week. Even last week, when we had the initial outbreak of the massacre in southern Israel, the market had a good week last week, and it continued so far into today. Now, is this a short covering rally or something like that? I don't think so. I think investors are looking at fundamentals of the U.S. economy and of corporations, and they're coming up roses. They're looking at things that are probably pretty good, and the worry that the war in the Middle East, they're not worried that it's going to spill over into the rest of the region and become a regional conflict. I am a huge believer of peace through strength. We have 2 aircraft carrier groups now off the coast of Israel, the Mediterranean. Nobody wants to mess with them. And of course, if there is a problem, there was one thing that Democrats and Republicans could agree on. If we need to, and somebody gives us a problem, we send in the Marines, the greatest fighting force on planet Earth. And if we send in the Marines, nothing's going to help whoever the Marines are going after. There's nothing you can do to stop it. And the Marines have better aircraft. They have F-35s. And, their ability to project power is no longer just subject to the Navy transporting them around. The Marines now have their own projection of power. It's a different ballgame. The Marines they're more dangerous and powerful than they've ever been. Okay, so that's that. And I think we've taken enough of a look at what's happening in the market. So just to reiterate, when investors get too negative and start to all flip to one side of the boat per se, and the boat tilts one way, that's when the boat stops and rocks the other way and throws everybody over the other side. Same thing happens with investing. When you wake up and you are so certain that everything is going to be so bad, we get a turnaround. So we'll keep following the news, but remember this: news is meant to throw you off your money game. Don't let the news push you around. All right. Thank you so much for watching. We'll be back tomorrow. And if you have any questions after you watch this, whether from the replay, the live, you let me know in the comments, and I will definitely get back to you. Have a great day.